Collision 2023. Good morning, good afternoon to you all. It's great to be back here despite the thunderstorms and the rain. I'm really glad that you made it. Is our money safe with AI? Who in the room, let's get a little bit of a temperature here, does think that our money is safe with AI? Hands up. No one thinks that our money is safe with AI. Wow, we need to really talk during these next 3 days here at Collision. So, ladies, what about you? Is our money safe with AI? From a scale to 0 to 10, 0 is not safe at all, 10 is super 100% bulletproof safe. Trisha, what do you think? Is it safe?
I think it's minus.
Minus safe.
Yes. I think it's a really interesting paradigm that we're in today, and the potential threat to the financial ecosystem is going to be unprecedented.
Laura, would you agree? Minus?
So I wasn't prepared to go into minus, but I wasn't even thinking on that scale. I like where you went. I think we're at like a 2 or a 3. And I hate to say it because I feel like this is the place where we should be optimistic, but I think there are 2 primary reasons for that. One is fraud. As you know, Trisha, too, it's getting more and more sophisticated. Lots of it, the sort of potential with AI is huge. We see deep fakes. We see all sorts of stuff happening. My co-founder and CTO likes to refer to this as sort of the Red Queen hypothesis, where we're all in this Darwinian world of like, fraud gets better, we get better, fraud gets better, but fraud is sort of outpacing us. And then the second part is we as banks or fintech companies who are regulated and audited have a lot of explainability kind of burden. We have to demonstrate what's happening, why we're making the decisions that we are. And so I actually don't think we can use the potential of AI to its fullest yet. There are applications that I'm sure we'll talk about, but we're not able to actually do the things that the fraudsters are able to do.
Now, we've just heard a little bit of a business pitch, obviously, for Alloy and Unit 21, because this is exactly why we need you, ladies, and your startups as well. Now, Trisha, I love your shirt. I must say, fraud fighters. Show us your shirt a little bit more. Wow.
Fraud
all right.
fighters.
You need to let us know where we can purchase it afterwards, because fighting fraud is exactly what you are doing, and fighting a financial crime, both of you. So tell us exactly, how can AI actually help us keep our money safe?
Yeah, that's a really good question on what can AI be useful for. And I think the first way to approach the problem is to understand how is AI being used by criminals today. And the biggest way that AI is already being used and will continue to be used is in perpetuating scams. So the previous way that I'm sure everyone has had some kind of, Nigerian prince email, right? Or some kind of child in the hospital email that you know is a scam because maybe there are spelling mistakes, there are grammatical errors, it's a crazy story. But now with AI, it's much more possible to create very realistic emails that are grammatically correct, that do not have any punctuation errors, and that read like a normal email. And that can be done with voice as well. So when you do not know you cannot trust the validity of the input that you get from a potential vendor or from a potential customer, then there is a lot of scope that a business or an individual might send money to a place that is ultimately a fraudster. So that's how AI we expect, and we're already seeing it to be used for fraud. The best way to then attack that problem is to understand how can we leverage data more effectively to see where the fraudster may be leaving their breadcrumbs. And AI is ultimately as good as the data that you have. So a big part of what companies and the financial services industry needs to do is get much better at understanding the quality of data and be more effective in using data to unlock understanding where the fraudster might potentially be leaving their breadcrumbs.
Laura, Alloy was established some 8 years ago in 2015, so can't really be categorized as a startup anymore. Now, your goal is to connect fintech companies with banks and to onboard more good customers. I don't know what you mean by good customers. I hope as a Swiss person coming from a banking country, I'm good. How do you actually have checks and balances in place to make sure these are good customers?
Yeah, our perspective is that one of the biggest downsides or costs of fraud is not just the dollar cost that occurs when you, as a not-so-good customer, scam your bank or fintech company, but it's the opportunity cost instead of you applying as a good customer and that bank saying, nope, we couldn't be sure about you, sorry. So there's a giant opportunity cost, and that's why the checks and balances are really important, so that you don't have huge rates of false positives. You also don't have massive, thousands of people who are reviewing everything. The cost goes up, which gets passed along to consumers or small businesses. So our sort of perspective on it is that you have to pull in all the data you possibly can. As Trisha said, the quality of the data is what sort of matters, especially when you're leveraging AI models. And so we think that the key here, that what industry has been missing, is that they've been entirely focused on what's typically called transaction fraud. Looking at a bunch of transactions and saying, okay, here's the anomalous one, or here's the thing that makes this one look weird, suspicious. And instead, we're missing a lot of identity-related data, device data, sort of all the things that you've been doing, biometrics. All of that is really critical, but typically has been left out of transaction fraud detection. And so that's one of the kind of keys to actually getting better and sort of pushing this forward, is making sure that you're incorporating all the identity data you can. Typically that's collected at onboarding, that you have access to it as you continue to make decisions throughout the life cycle of the customer.
Trisha, over in Europe, the European Union has just drafted a new AI Act, which should actually regulate the AI space a little bit more, including generative AI systems like ChatGPT, but also real-time facial recognition. Do you think that this is a step in the right direction to fight financial fraud in the AI space?
Yeah. It's, in terms of regulation, it's really important that regulators ensure that AI is being used in a way that prevents bias and enables fair access to the financial services ecosystem. But it's really important that ultimately a big result and a consequence of this regulation is that the fraudster wins. Because now the fraudster still has access to all of the AI tools and the company doesn't. So it's important to ensure that ultimately the end user is benefiting from the regulation. And really that is our perspective, is that regulation is really important to, as a tool to ensure consumer protection at the core. But if used in a way that ultimately prevents companies from utilizing the latest in technology, it's going to harm consumers at the end of the day.
Fact is, Laura, that regulations are very national or regional in the case of the European Union. Do you think it's possible, and should we actually adopt a global regulation when it comes to combating financial fraud in AI?
I don't have a good answer for that. I don't know what the right perspective should be right now. I think in large part because we're still figuring out this balance between protecting consumers, both in the sense of like not letting them get scammed, but also making sure they get access to products, and then protecting our money, our kind of regulatory environment. And so I think it's too early to know. I do think that the focus today should be on explainability, like how are we making these decisions, making sure that we have the ability to understand the models that we're using. And I think that's the barrier to adoption today from my perspective, especially in the United States, when you're trying to have banks adopt this, which is by far the largest sort of market share. So if we focus there, I think we can make progress in figuring out what's actually effective and what's not. But first, we just have to basically just at a very fundamental level understand the way that we're using this, explain it to auditors, explain it to regulators. So it's sort of this supercharged model governance process that we're going to have to go through.
You've just been to the UK. You're obviously a frequent traveler as well. And over there, but also in the US, financial fraud is the most prominent fraud type of all, at least in 2022. How should we fight this problem as individuals, as businesses? What's the best approach?
Again, I think it's like a data collection problem. It's get all the data you possibly can and make better decisions with that data. And so that is about, usually it's one of these problems. I hate to say it this way, but it's sort of like a really stupid problem, which is that when you look at banks especially, the data is incredibly siloed. And so I could say something as basic as you should use you should know something about the device that I used when I signed up when you're looking at the time I took 10 ATM withdrawals and see, is that device being used? And it's not today, is the sort of short answer. All of this is incredibly siloed. And so step one is just sort of like put it all in one place, look at a centralized system. I think from an AI perspective, develop systems that can incorporate models so you can have the best model at any given time. And models are always out-modeling each other, which is sort of the good and bad of kind of working in this industry. Is next year there's going to be a better one, there's something better. And so being able to quickly implement and adopt the newest technologies and newest AI models will serve you much better in the long run, but that's not an easy thing to do. It's really hard, especially as a financial institution, to be able to integrate and actually use new technologies. And so I think setting yourself up for kind of future-proofing and iterating and then testing is really, really important.
And let's talk about money, because after all, we're sitting here on the money conference stage, and investments, of course, are very important. Trisha, Unit 21 was founded in 2018. You've seen a rapid growth as well, just like Alloy, and you raised close to $100 million from big investors like Google, Iconic Capital, Tiger Global, Core Innovation, and others as well. But do you think that there is enough investment in this space at the moment, given all the risks?
Yeah, it is a really interesting question. Is there enough investment? Ultimately, fraud is one of the oldest professions in the world. As long as there have been humans, people have been trying to defraud each other. And fraudsters are the most creative people on this planet. They are extremely entrepreneurial. They run their operations like small businesses, and they're very creative. So as long as there is fraud in the world, which our stance is that there will always be, there is opportunity for companies like us to serve the market and ensure that the individual and the business is protected.
Well, fact is that you're always going to play catch-up game, isn't it? Because it's like a hamster wheel. The fraudsters, they will get more creative. So there is always great business.
And I think that what we saw in the last few years is that fraud went from being largely an individual activity, at least significantly an individual activity, to fraud rings and fraud scams that are sort of their own not venture-backed, but money-making startups got incredibly sophisticated are reinvesting. And so I think it's a different cat and mouse game.
It's an organized crime.
It's much more organized.
All, right? So in the fraud prevention space, Laura, there seems to be really a thriving vibe despite the global economic downturn, right? Do you think that there could even be a risk of a bubble at some point?
That's a great question. I don't know where we're headed. I would be much richer if I did. I think it's sort of similar to the investment question. Like, we're in this place where I don't see fraud stopping or slowing anytime soon. And so we have to keep up. And so the risk of a bubble may be there, but we have to sort of continue investing here. And in certain cases, we're long overdue. So I mentioned the bank siloed data problem. That's a problem that exists for other reasons or has other implications beyond fraud. We have a lot of catch up just on our basic infrastructure to do that is worth doing. I also look at kind of bubble moments and think, we've gone through these before. I tend to look at this as a sort of like 5-year-old level, kindergarten level here, and say, if I believe when we started Alloy, I think something like 5% of bank accounts were opened online every year. So the vast majority were still done in branch. That number has changed dramatically. But even in 2015, we all had mobile phones. You could go, yeah, of course, of course that's going to change. We all want to do everything on phones. This is going to change very, very rapidly. And that's still how I look at it today, that we have so much more growth and digitalization that is inevitable that I worry less about the bubble and much more about what's the threat to progress here, fraud being a big one.
Yeah. Trisha, even though this is a technology conference, Collation, a lot of people are worried that AI could take our jobs also in the financial industry. What's your thought on that?
It's a really good question. So there are two answers I have. One is we today primarily serve the fraud operations team, people who are working in banks, in fintech companies, and payment companies, and helping identify fraud that is perpetuated through their platform. And as we talked about, fraud is a game of whack-a-mole. You can't just ever get done with fraud, because ultimately there is this intelligent criminal who is trying to identify the weaknesses in your system and trying to attack you. So we think that fraud operations as a job will always continue, because this game of cat and mouse is going to continue forever. So from a fraud operations perspective, we think there might certainly be more efficiencies in the job, but as a category, that will not go. But in general, there is this degree of fear that AI might come in and take away all of our jobs. What's going to happen? And my personal philosophy is that every time there has been a technological paradigm shift with the Industrial Revolution, the printing press, there's been a category of jobs that don't necessarily make sense. But humans are very inventive and innovative, and we'll always find new work to do. So as long as there are problems on this planet, which there are many, we'll always have work to do, and I'm not worried about the future.
Laura, the SVB downfall here in the US has really sent shockwaves across the board and exposed a lot of loopholes as well, a lot of risks and so on. Can technology really fix some of these problems, especially AI, do you think?
So I think it exposed lots of types of risk, which someone smarter than me can answer about some of the stuff that SVB went through, some of that kind of systemic risk. I think from a kind of very basic perspective, one of the things that we saw was that the move, quite literally overnight, of money. So, I'm a startup who banks at SVB, and I need to move to a different bank account. In some cases, had some of our clients doing 10x their volume that weekend. And what it exposed was, one, onboarding processes are really broken at certain places. We ourselves saw cases where friends at other startups were being told to wait 30 days to try to open the accounts. So I think there's that problem, right? Like it can be a very slow, burdensome account opening process, even for the banks that want your money. Many of them don't want startup money. The second thing is, if you did try to open up accounts in an efficient way, you might have sort of fast-tracked people. We saw a lot of these fast-track processes going on, which were great because they wanted to get everyone the accounts they needed to move their money today. It opens up room for fraud. Anytime you do that. We saw that similarly with the PPP efforts back in 2020, where banks had to stand up, or lenders had to stand up these credit facilities, again, in like 48 or 72 hours, and the fraud was rampant because they didn't know how to deal with fraud, especially in digital channels where it's easier and sort of the upside is large. And so I think those are two lessons we really saw come back around again this year with SVB. Is account opening is tough, and fraud protections, if they're not in place, you can get taken to the cleaners.
Yeah, would you agree with that, Trisha? Because you live in San Francisco, so you're really exposed to that problem there as well.
Yeah, definitely. I think it's a really interesting time in the ecosystem right now. But I'm optimistic about the future.
So there is a big question about responsibility as well, right? Who should protect our digital wallets, our money, and so on? Is it our own responsibility? Is it the regulators? Is it the companies? Is it the government?
It's a really good question, and I must give a really big shout out to the US for some of the great consumer protection that we have in a lot of our financial methods. So when you use a card, you're not scared that there might be fraud. You know you can dispute it. When you have an ACH transaction, you know you can dispute it. And ultimately, because you and I do not have a fear that when we use a particular payment method, we might be subject to fraud, we actually use it. And that's what enables financial innovation to happen. If there wasn't this degree of consumer protection from fraud, then we would still be putting our money under the bed, because there's no trust in the financial ecosystem. So it's really important that regulators put this burden on the companies that are providing financial services, otherwise there will be no invention.
Before we go, let's take a moment to get some food for thought as well. Which is the main trend in the AI space and digital fraud, financial fraud, that worries you the most in the next couple of years, if you have to look into a crystal ball, Laura?
I think I've said this a couple times, but the thing that I'm worried about the most is a ton of innovation in AI models, particularly in fraud, and all of it may be fantastic and incredibly effective, but not explainable, and therefore not usable. And so I think that's my biggest sort of fear is and I'm sure there are great companies working on this, so I would love to hear about them, but make sure that we can actually explain what we're doing. That's my big fear.
Yeah. We definitely need more skills and training in AI as well, starting at a very young age. What about you, Trisha? What worries you the most and keeps you awake at night?
What worries me the most is the lack of core infrastructure that companies have to make sense of their data, to get their data to be able to be useful in models. And that's a very core problem that's existed in the last 30 years of software. So I think there has to be a fundamental mentality shift to actually fix that problem.
That was Laura Spiekerman. She's the co-founder and president of Alloy, and Trisha Kothari, co-founder and CEO of Unit 21. These ladies are also available on the app, so you can reach out to them and connect, and also on LinkedIn and other social media platforms as well. Big congratulations to these ladies and fraud fighters here on stage. Thank you very much.
Thank you, Martina.